Hello. Today is Sunday, July 5th, 2026. Here is your daily signal. According to Fortune, Russia's economy is sputtering under the strain of wartime spending and intensifying Western sanctions, as President Putin persists with military operations despite fuel shortages and rationing across the country. Since Russia's invasion of Ukraine in February 2022, the government dramatically increased military expenditures, shifting towards what analysts call military Keynesianism, prioritizing arms production and state-directed spending. This shift, alongside sanctions targeting energy, technology, and banking, has left major oil and gas companies such as Rosneft and Gazprom under pressure, further exacerbated by Ukraine's strikes on more than 50 oil refining sites. On July 3, Fortune reported Russians now face rationing and shortages, while a July 2 article highlighted the economic, political, and military abyss resulting from sustained defense spending. With continued military outlays, Russia risks exhausting its cash reserves, destabilizing the national budget, and worsening living conditions as infrastructure attacks and sanctions undermine export capacity and threaten the country's ability to sustain a prolonged war. Next, moving to the shifts in financial markets brought by artificial intelligence and political leadership. President Trump has stirred turbulence in financial markets, with Fortune noting his public criticism of the Federal Reserve Board as hostile and his praise for newly appointed Fed Chairman Kevin Warsh, signaling efforts to reshape central bank policy. Background developments show that AI-driven technologies have accelerated market complexity and decision-making, raising regulatory and central bank concerns, especially in the context of stablecoins and digital currencies. Trump's $2.2 billion income haul, as reported by Fortune, is emblematic of growing influence among big players, a theme underscored by economist Robert Koppel's big player theory. The July 3 Fortune article underscores that political involvement such as Trump's opposition to Governor Lisa Cook may put the Fed's independence at risk, while AI-enhanced volatility could force central banks into more frequent interventions. The dominance of major actors, now amplified by AI, threatens to boost systemic risks and decrease predictability as regulatory frameworks and investor behavior adjust to the new era. Up next, the uncertain horizon for quantum computing firms following their IPOs. ACOM, Europe's first public quantum computing company, has underscored the risks facing quantum tech firms after debuting on Nasdaq, as reported by TechCrunch. Quantum companies are under increased scrutiny to demonstrate commercial viability post-IPO, but the sector remains in early development, with numerous technical and economic uncertainties clouding the outlook. On July 2, IQM launched its IPO at a valuation near $1.9 billion, yet executives were quick to admit the unpredictable business models, long commercialization timelines, and uncertain market adoption. Share price volatility is typical post-IPO as investors ranging from venture capitalists to institutional funds closely monitor for performance signals. Near term, this could lead to cautious investor sentiment, delayed procurement decisions among enterprise customers needing more technical maturity, and over the medium term, potential consolidation or strategic partnerships as smaller quantum players strive for stability. With revenues lagging, public quantum computing firms may be forced to shift strategies or reprioritize their R&D focus to survive. Now, onto the markets. Across international markets, Italy led gains with a daily rise of 2.54% and positive momentum backed by EWI. The United Kingdom also moved higher, as EWU rose 2.66% on the day. Spain and Belgium showed moderate advances while Netherlands and Chile slipped slightly. China large cap remained nearly unchanged, with FXI falling marginally and suffering the steepest month-over-month decline among major Asian ETFs. Japan inched up just under 0.1% for the day, while India and Singapore also recorded modest gains. Commodities saw platinum surge over 3%, outperforming other metals as PPLT led the rally, while silver moved up by 2.68% and gold gained 2%. U.S. oil, represented by USO, edged up 0.69% but is notably down almost 25% month-over-month. Copper, carbon credits, and natural gas posted small daily gains. Agriculture and corn slipped slightly. In the favorites category, Adobe jumped over 4% for the day, the strongest daily gainer among the group, while Microsoft advanced more modestly and AMD fell more than 4%. Apple gained nearly 4.8% as Oracle and Nvidia both declined. Among S&P 500 sectors, healthcare led with a rise of 2.63% on Roman 45, while finance and real estate also posted gains. Semiconductor stocks plunged, with stocks down over 5.5% for the day, and clean energy fell nearly 5%. Aerospace, rate, transportation, and agriculture sectors reported steady gains. That's it for today. You can find more news and details on our website. Goodbye.